Hi everyone, and welcome to another episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan, and on today's show, I want to talk to you briefly about not being able to pay your tax. So it's quite likely, as we're recording this in January 2025, you have just had a tax bill and maybe you're not in the best of places. Maybe you think, do you know what? I don't know if I can afford this. And I want to talk to you about what your options are. Firstly, don't panic. There are options, and you might be surprised to learn they're pretty good options in many cases as well. So let's get into it. And as a reminder to you all, of course, we do record these and throw them up on YouTube. So if you want to actually watch this or listen to it in the background on your PC or something like that, and it's easier, you can do that on a YouTube channel. Just go to search HeelanHub and it will be there. And you'll see me not doing a lot of talking to the camera and talking to a microphone, talking about this particular podcast. So let's talk about it then. So hopefully, it's going to be a relatively short one today, in that you would have hopefully done your tax return. Now, this tax bill can surprise people. We talked about it on previous shows. There's these things sometimes called payments on account. And what happens is you have your tax bill for the year, and then they ask you for some tax that might be considered upfront. There's an argument to say whether it's actually upfront or not, but generally it's deemed that people feel like it. And you'll have this bill to pay. So as we're recording this in Jan 25, you might have had the tax to pay at the end of January. So 31st January 25, they'll want your balance in payment, and then they'll want this next sort of chunk of the tax up front. It's normally half the amount, and then they'll ask for another half amount in July. If you've only got one amount to pay that doesn't include these payments on account, it means you've got probably under £1,000 of tax to pay. In most circumstances where you've got over £1,000 of tax to pay, you generate these payments on account. But if you go back a few episodes, I'm sure we've covered this previously and talked about examples. So let's say you've got this big chunky tax bill to pay. What happens? Well, firstly, you should celebrate, because if you have got a tax bill, it means that you've been successful. You might not feel like it. I know I never feel awesomely successful when I've got to pay tax bills every January and July, but it should be looked at as, okay, look, if I'm paying tax, at least my business, and of course, we're always talking about this from a small business owner's point of view, is successful. So that kind of hope out of the way, let's talk about what happens if you can't pay. So as I said, don't panic. You're going to be surprised on this, I'm sure, if you've been in this situation. I think most people think the government, they're this big bad body that's going to come after you if you don't pay, and it's the one thing you should pay on time. But actually, and I think the government recognise this, they're one of the easier creditors to deal with. And by creditors, I mean people that you owe money to. You know, if you don't pay your mortgage or you don't pay your loan or something, they're going to come at you hard, and debt collectors are going to be straight on you. The revenue's not quite, at the time of recording this, not quite there. And I'll explain a little bit more. So what happens is, first, let's talk about what happens, and I'll talk about debt collections and options. Generally, they're going to charge you interest from the day that the tax is due. So if you don't pay it on the 31st of January, and actually, as we're recording this, Barclays Bank had a massive problem. And for so many people, myself included, you couldn't actually go on the bank and pay the tax. So there is that. That's another problem aside. But so let's say you didn't pay it. You'll notice if you log on to your online account, you'll see they're starting to charge you interest. Now, previously, that interest was just over 3%. Back in the budget in sort of autumn last year in 24, they raised it to 7.25% interest from about 3.25. Now, that's not a surprise to me, because it was actually made financial sense often to not pay the revenue. And that sounds weird, but if you're in this situation where you had various debts and you were like, which one shall I pay first? The revenue was bottom of the list, because they were by far the best interest rate that you could get since all the mortgage rates moved up. So as a result, it's now far more in line with a commercial loan. You know, if you go out there and you try and get a personal loan, you're probably looking around 7%. You know, if you go out there and look for a business loan, it's 7% plus. Like, they're relatively expensive to do. And they're just making sure that they're in line with that. So you're not in this situation where it makes complete sense not to pay them. Now, so you're going to get interest charged from the day. And the way that works is, if you imagine, I know many of you will know how to do this, but just to give you a very simple maths example, if you've got £5,000 to pay on the 31st of Jan 25, you don't pay it, but you pay it, say, on the 28th of February, so you're 28 days late. That is £5,000 times by 7.25%, gives you about £362-ish. And then you divide that by the amount of days, so say it's a 365-day year, and times it by 28. That gives you, basically, the short of that is you would pay £27 interest on your 5K if you paid it within, in this example, 20 odd days late. So it's not crazy money just to not be able to pay it immediately. If you needed to wait to the next payday, for example, there's not going to be tons of interest. But you do have to be relatively quick about this, because what you do get charged after 30 days is a late payment penalty on top of that. So you get your interest plus that. And that's basically 5% of the tax that you owe in blocks. So after 30 days, if you haven't paid it, you got the interest plus 5%. So for example, on that 5K, if you paid it late, then you'd be looking at about 250 quid. So 250 quid plus the interest, it starts to rack up. Now, the good thing, if you're looking at it in some sort of good sort of site, is that the 5% amounts that you pay on these chunks, so you pay 5% if not paid after 30 days, you pay another 5% if it's not paid at the 6-month stage or whatever the balance is, and you pay another 5% at the 12-month stage. So those penalties, oddly, can rack up more than the interest will, depending on what's happening. So there can be relatively chunky penalties. And there's a tool on the Revenue's website that you can go to estimate your penalties. If you can probably Google it, but if you did want to find it, I'll try and link it in the show notes on the YouTube channel so you can go click on it. But yeah, there is a tool there that'll help you estimate them. So if you're going to be late, they're there. Now, what you're not charged late payment penalties on is that tax up front, oddly. You're charged interest, but you're not charged the penalties themselves. So again, if you owed 2.5, so let's say quite often on January's payment date on the 31st of Jan, you have to pay a combination of balance in payment, so the tax you owed, and then you have to pay some up front. So let's say it was £5,000 in terms of what you owed, and £2,500 owed on the year, and £2,500 of upfront money. Then actually that 7.5K, when they came to figure out the actual late payment penalties, they would work them out differently, because one would have penalties on and one wouldn't, but you both would have interest. So there we go. So that's kind of a very quick snapshot of how that works. I mean, I think there's a blog on our website, and there'll also be, the revenue site if you want to go and check out how those penalties work, but you can use that tool. Now, we started off talking about who should I call when it isn't Ghostbusters. It is actually the revenue. So their advice, if you read their website, is look, the minute it's overdue, you need to contact us once you become aware that you can't pay, and then we'll talk to you about it. And of course, that's solid advice. However, in practical terms, what we see at our end is if actually you think, do you know what, I'm going to pay it in the next 30 days. Currently, as we speak, the wait times to get through to the revenue is crazy, and it's difficult to get through. And you just think, if it's just you were just going to tell them you're going to be 3 days late, I'll let you decide whether you think it's a good use of your time to phone the revenue and tell them that. You might decide, actually, I'll soak my interest up and then I'll just get them paid. When it comes to anything longer than, say, 30 days, because you can see these payment penalties kick in, they actually have a business payment support service, which is pretty good. So, and actually, originally you had to phone this business payment support service. It didn't exist. It was a new thing. You just have to do a deal with the debt collector, basically, when they tried to debt collect you to string this out. But the revenue realised some years ago that actually it's easier if they arrange it. So you phone it, whether it's outsourced or not, I don't know, but it doesn't feel like it. You phone the revenue and they ask you a lot of questions, and depending whether it's a business tax or a personal tax. I mean, we're talking about personal tax now, but it could also be that it's business tax related. They work slightly different in terms of what details you need to provide and what kind of deal they do with you. But I've seen it where deals are done 12 months pretty regularly on different taxes. So have a chat with them and do a deal. Now, in those arrangements, they won't charge you additional penalties if you stick to the plan. They're going to charge you the interest. So it's worth thinking about and getting a formal time to pay arrangement, as they're known from the revenue. Now, if you think, it's scary and it's going to take me ages to phone the revenue, and it will take you ages to phone the revenue right now, at the time of recording, you can actually, if you have an online personal tax account and it's a personal tax bill, so it's the self-assessment tax bill, the one that's related to your personal tax return, that's just to be really clear on that. If it's under £30,000 and you're kind of up to date with everything else, there's a few more categories, but you can actually sort of criteria, but you can actually go in there and you can automatically arrange a time to pay arrangement inside of your personal tax account online without the human interaction. So that's definitely a nice, easy way